Friends, 10 years is a long journey in the life of an advisory firm. Advice is very different from running a business. Investing as a discipline has a choice to choose between being run as an advisory firm and as an asset management firm. The DNA of an advisory firm has to be very different from the DNA of an asset gathering firm. When we started ithought, our idea clearly was, how do we excel in giving advice? How do we focus on being truly professional? How do we build a team of dedicated professionals? How do we sustain that professionalism for long years? And how do we translate our professional skills into investment impact in your portfolio? Essentially, we knew it was a responsibility. It had a very high fiduciary element, and we needed to spot opportunities to suit every client in every economic context. That, in the essence, is what has been our journey, and that will always remain the core of what drives us in the future. In this journey, we have made a lot of impact on your investing. It is that impact investing that I am going to talk to you today. At different points in the last decade, we have seen markets getting polarized. We have seen infra being the most preferred sector. From there, today you are seeing infra in the doghouse. We have seen FMCG as a sector continuing to be a laggard, struggling to find growth. Now, FMCG is seen as a fail-safe sector. We have seen pharma swing from extremes. At the beginning of the last decade, it was in the doghouse. From there, it became the darling of the markets in 5 years, to again be in the doghouse as recently as January of 2020. Today, pharma is again the darling of the markets. Clearly, you know that how these opportunities are weighed, how they are exploited, how we ensure participation, and how we translate our participation into performance is not a simple thing. That is where we believe that the real opportunity for an advisory firm exists. That has been the constant factor in our work, and it has delivered very interesting results for many of our clients. But the results will never be a given, nor will it be uniform. Why is that? Because the nature of advice is such that it has to get a buy-in. Good advice, only when bought into in the most extreme circumstances, will make impact. So, if you want to create impact investing in your portfolio and you are taking the help of an advisor, it is very important that you trust the advisor. You ensure that his ideas are getting the desired efficiency, and you are showing the right approach to risks. If all three things fall in line, then you are able to make impact in your individual portfolio. Most investors are willing to invest when performance is already there, when it is behind. This ensures that you only have a limited upside in the future. Whereas, when there is no performance to show, if you had invested, when performance comes, the entire upside belongs to you. It's very difficult to start at the right place, but if you persist from where you begin, stay convinced and disciplined, you can find performance in every situation which is adverse. Performance is born out of adversity. It grows over time and delivers in a burst. Unfortunately, our overwhelming investment behavior is to seek only the burst. We only want to participate in the last surge of momentum. Effectively, this will never end well. In our advisory model, the focus is in buying when nobody wants to, staying convinced when adversity is rising or at its peak, growing the position as the sentiment turns in our investment, and gradually walking away when consensus agrees with us. By doing this, we do generate returns, that is a given, but there is a more important factor which I believe is more valuable to our advice. We don't buy expensive investments, we don't take too much risk, and we ensure that the value of what you buy is always higher than the money you pay as an investor. So the advice actually saves for you when we give it, so that it delivers for you when others agree with our opinion. This is how impact investing works, and this is how our model has sustained its performance over the last decade. As time changes, the model also has transformed itself. It is 3 years since we voluntarily chose to only advise investors under the direct option of mutual funds. Time has come to move to the next level, and we are planning to add 2 layers to our advisory in equity. We are planning to add ETFs, both domestic and global. We are also planning to add direct equity so that we are able to participate in very select ideas where we have very high conviction. So, from just one investment, we have migrated the equity investing to cover 3 parts. It's not just that, we have also added debt advisory under the direct option and under products which you can buy, where we take fees from you to give you advice. So in one place, you can invest in equity and debt mutual funds under the direct option, and that option is also now available for you. So we are growing the model with 2 things in mind: to provide wider scope of advice, to provide a single point of advice, and to also give that advice in a way in which it delivers value for you constantly, and it's definitely superior to other forms of advice. This essentially is how we believe impact investing can be done for you, and as a team of professionals, we remain committed to delivering that value to you at every point in time, in every economic cycle, responding to every adversity and turning them into future opportunity. Thank you for watching this video. I really look forward to having you as part of the ithought team of customers and being with you in your journey to wealth. Thank you.